Now that we understand market structure, identifying trends, and the 3 different types of structure that make up a trend and how we can understand what the market is doing in the order flow that it is creating via structure, we can take it a step further in our understanding and explain. We can take it a step further in understanding protected and targeted structure. So in essence, when we have an uptrend, what we're expecting to see are a series of higher highs and higher lows, with the expectation that every time a higher high is put in, we would start to see some sort of corrective price action that would create substructure to form a higher low. Once that higher low forms, we find some sort of change of character, create minor structure until the swing structure is broken. Now, if we think of structure in its most basic element, what we can say is that once we've created swing structure, we're operating between this range of price. We have our swing low and we have our swing high. Now, when we look at that and we understand that we are in an uptrend, we are expecting some sort of higher low and a continuation of that trend. We would see price creating substructure in the way of a counter trend pullback. We would form some sort of higher low, see a change of character, create minor structure, and then eventually break the previous swing high, creating a new higher high. So in essence, the idea of this structural range that we're seeing between this swing structure, there are 2 different ideas or outcomes that could happen. 1, the continuation of the trend where we break swing structure and create a new higher high, or 2, we break swing structure to the downside, invalidating the bullish trend and switching to bearish. So with that idea in mind, when this high is created, the job of this high is to invalidate the structural level, breaking to the downside, which would then mean that this would be a strong or protected high. But if we are to remain bullish, price will correct. It will fail to break this low or fail to invalidate the bull trend. And once that happens and we start to see that shift, that creation of minor structure, and what that implies is that this low becomes protected and this high becomes targeted. And because we're in a bull trend, what we can see is price then continues to move to the upside. It breaks the swing structure. It breaks this targeted high and continues to make a new higher high. And if we just delete some of these drawings, and what we'll see is once price creates a new range in price between this swing low and this swing high, and our expectation, if this bull trend is to remain in play, is that we would see this previous swing high broken and forming a new higher high. So the same logic would apply though, that if this low was invalidated and we seen a break and close below, that would mean we are switching from bullish to bearish. So if we look at this swing high and it successfully did its job in breaking and invalidating this low, we would consider that as protected, as there were enough orders and momentum to push it and break structure. But what we can see is price, again, creates substructure, forms some sort of higher low, starts to create minor structure. And once this process happens, we can start to say that this high has failed to do its job in breaking the previous swing low and switching trend, and that this high is more, and that this low, this higher low, is more than likely going to be protected to target this previous high. And at the end of the day, what this concept of protected and targeted structure is ultimately conveying on the charts is it's just applying the expectational order flow principles of what we can expect in an uptrend or what we can expect in a downtrend. And what do we expect in an uptrend? We expect that higher highs are going to form. We're going to get some sort of pullback. A higher low is going to form. We're then going to move to the upside again, creating a higher high. And the expectation is that will continue and keep continuing until we start to see a change of character, a break to the downside. So when we're using that concept of protected highs and protected lows, targeted highs and targeted lows, so we would know that in a bull trend, the highs will all be targeted and the lows will all be protected, because in essence, price is just continuing to move to the upside. All of these lows are doing their job in breaking swing structure. It's best to focus on protected and targeted highs and lows using swing structure. Yes, you can apply this to substructure and minor structure to create a framework of understanding the interworkings of the order flow that you're seeing, but it can get a little bit confusing when you see multiple things happening, because what you might see is we see a move, we start to see a pullback, so we're starting to understand that this low might be protected and that this high is going to be targeted. But then what we might see is similar to when we were talking about substructure and minor structure, that this component would be substructure Once we see a change of character, this would be minor structure. But if we don't actually see a true follow through that targets this previous high, then that substructure can then continue before we start to see true minor structure happening. Once that happens, we can start to gain the understanding that this low is potentially protected and that this high is targeted. And again, this all comes back down to understanding trend. We're using the concepts of protected and targeted structure as just an additional tool of understanding what is going on behind the scenes when we are looking at structure. It's not an end-all be-all, it's just an additional tool in understanding what could happen when we're seeing price action navigating throughout structure. It allows us to create a better and more structured framework of understanding where to target our trades, and we'll talk more about this when we get into entries. But when we have, say, an uptrend, we're looking to buy at a higher low. Once the higher low is established, we're under the expectation that we are to continue bullish, and as a result, this high, for instance, failed to take out this low. This low is starting to create minor structure. We've seen that change of character. So based on that understanding, we would expect that this high would be targeted. So if we are looking to trade, especially higher time frame swing structure, like the 4-hour or the daily, we could look to target our trades from a buy position down at this higher low at the previous targeted high and end up closing a portion of our trade to lock in some profits and let the rest run, understanding that if we are truly in a bull trend, that price will then continue to move to the upside to a certain level before we start to see a new pullback in the process taking over again and again. So that's really the main concept and idea behind protected and targeted highs and lows. So the easiest and probably most simplified way that I can explain protected and targeted structure is that a high and a low, they both have the same job. Their job is to take out structure or counter structure. So highs should take out lows and lows should take out highs. And if a high or a low fails to complete what it is supposed to be doing, it becomes targeted. If it is successful in doing what it's supposed to be doing, it becomes protected. This also roots into looking at supply and demand, because more often than not, these protected areas coincide with supply and demand zones, and that's ultimately what's creating them. Because like I said in the supply and demand section, what we are doing by trading using supply and demand is we're identifying the footprints of large orders being entered into the markets. And when these large orders are entered in the markets, does it seem reasonable that price will go lower of where large orders have been placed? No, it doesn't. We would be riding with those orders. So the understanding of the protected lows in this case would be this low is protected because a large grouping of orders was created at this demand zone. And as a result, the next logical spot to target would be the previous structural swing high. And what we'll touch on more in the liquidity section is also that there are multiple groupings of orders that would exist above the swing high. So from that perspective, we have a protected low, we have a targeted high. Why is it targeting it? Because of liquidity. But again, we'll dig into that into the next section, just to get your mind thinking at the end of the day of what is actually being targeted when this sort of phenomenon happens. But again, these protected points, whether it be a protected high or a protected low, are going to coincide with some sort of supply and demand zone or liquidity grab that's going to see an injection of orders into the market that's going to cause a run or a target of the other side of the structure. So again, if it's a protected low, we're going to target the previous swing high. And if it's a protected high, we are going to target the previous swing low. So what I recommend now doing is jumping to your charts, more specifically to the exercise that you would have done in the previous video, specifically mapping out swing structure, substructure, and minor structure, and really digging into that bit of information, looking at highs and lows, applying this framework to those bits of market structure, seeing when we created a low, was the low successful in taking out the high? If not, was the low targeted? And on the flip side, was a high successful in taking out a low, or was it targeted? And what this is going to do is going to just reaffirm your understanding of market structure. It's going to reaffirm your understanding of trend, and it's going to take you to a whole new level once you're able to fully integrate all of the supply and demand concepts into the market structure concepts, and then apply the protected and targeted structural components to that, it's going to make you a more robust trader in understanding the order flow that's happening on the charts. And then once we dive into liquidity concepts, it's going to just take that to a whole another level, because what this concept is really bringing into play now is liquidity, why price is moving to the areas that it is moving into. But again, we'll discuss that in the next section. And it's important right now to fully understand this concept and be able to identify it on your charts. One other thing to note about the concept of protected and targeted highs and lows or structure is how we can integrate that to supply and demand. So what I'll do really quickly is just clear up this. We're going to draw in another bull trend, seeing higher highs, higher lows, higher highs, higher lows. And if we're looking at this bull trend from the basis of supply and demand, we know that as price is creating higher highs and higher lows, the higher lows are more than likely going to tap into some form of demand zone, and price is going to continue tapping into demand zones and continuing to move off. So what we're also able to gain from that is, as price is creating the swing highs, it's also creating supply zones that is pushing price down into forming the higher lows that we see on the chart. So when we add in the concept of protected and targeted swing highs and lows, what we're expecting in an uptrend is that demand zones are going to get respected and that supply zones are going to fail and just be totally disregarded. So when we use that understanding, what we see quite clearly is that this supply zone failed to break any bit of structure or take out the previous low or previous demand zone. And as a result, the supply zone is targeted. We keep moving on. This supply zone or high failed to take out this demand zone or low. Therefore, this high or supply zone would be targeted. This supply zone and this high failed to take out this low and this demand zone. Therefore, this supply zone and this high is targeted. And that's another way you can bridge the gap and understand the relationship between supply and demand, market structure, and how we can apply these protected and targeted concepts to that. Because at the end of the day, the understanding of market structure and supply and demand go hand in hand. And as we apply all of the concepts that we've learned thus far, we need to understand how they bridge together, how we can use all of the concepts together. Just to recap and summarize everything, as we are in an uptrend, our expectation is that demand will be respected and that supply will fail. And when we're looking at an uptrend from the perspective of protected and targeted structure, we'd be expecting that all of the swing highs would fail to take out the swing lows. Therefore, the newly created higher lows would become protected and we would be targeting the previous swing structure. And as we continue, our newly created higher high swing structure fails to break our previously established swing structural low or higher low. And as a result, it makes our new higher low protected. And as a result, our previous swing structural higher high is targeted and broken, forming a new higher high. This higher high fails to take out the previous higher low. Therefore, it creates a protected higher low that is going to target the previous higher high swing structure to create a new higher high. And this will continue until we start to see supply being respected and demand failing. We start to see this once we see highs taking out lows, creating the shift from protected lows to protected highs and targeted highs to targeted lows. And this is the interaction between supply and demand and structure, because as we know, we're creating higher highs and higher lows, demand's being respected. In a downtrend, we're creating lower lows and lower highs, and supply is being respected. So the easiest way to remember all of that is higher highs, higher lows, uptrend, respecting demand zones, protected lows, targeted highs. And if we're looking at a downtrend, lower lows, lower highs, supply being respected, protected highs, targeted lows. It's as simple as that, but it's incredibly powerful to understand how all these components work together and how we can use them in a convenient package to understand order flow from a supply and demand and market structure perspective to get the best possible idea and indication of what order flow is suggesting so we can put ourselves in the best positions to win.